Welcome to the Silicon Fox podcast, where we explore the habits and stories of high performers. I'm your host, Mitchell Eschner. Well, Eric, thank you so much for hopping on the Silicon Fox podcast.
Yeah, it's a pleasure. Thanks for reaching out.
Absolutely. I mean, you have a fascinating background. I'm excited to dig into it. I was doing some research, and it seems like you've hopped around in a few different places and ended up in a space that I'm very passionate about, and a lot of our listeners are as well. So I always would love to. I mean, I like to start these episodes, and I think fundamentally there's like two interesting things for me. I'd love to just kind of dive deeper into some of your investment processes and how you think about the macro of the space you guys are in. But just to kick this off, so we have some context on you, just would love to hear about who you are, what you've done in the past, what you're working on now, so we have that as we jump through some of these questions.
Sounds good. So I'll just give a quick little bio here, which is back in the day, grad school at MIT, focused on computer science, specializing in quantitative bioinformatics. I worked in the same lab as my brother, studying sugars in the cell membrane used in signaling and growth. We did experiments together. We co-authored scientific papers together. Went on to do my grad school there and the first ever sequencing and analysis of 2 mammalian genomes. And I didn't really know what I wanted to do in my life. So everyone in my family was like, "You're super argumentative. You should go to law school." And if somebody says that, and you argue with them, you prove them right. And if you don't, they're still right. So one way or another, you end up in law school. I did that, was a practicing M&A attorney at a private equity focused firm for a couple of years, which did not align particularly well with my interests or skill sets. So I left and I joined a New York area startup, worked there for a couple of years in a few different roles, and then started my own company. CEO, founder, ran it for 11 years. And we grew from nothing to, we sold it to, we only raised about $16 million for outside capital. So pretty capital efficient as a startup goes. We sold it to Vista Equity Partners, the large private equity firm, for just under $1.5 billion. A little under a decade later, stayed on with Vista for a couple of years, learning a lot about Vista's much vaunted best practices, and it was really interesting to kind of see how they run a business. We were working on taking the company public, doing a pre-IPO crossover transaction. Russia invaded Ukraine, and within about 2 days of the tanks entering Ukraine, the public markets had dried up and our deal fell apart. It became clear it was going to take much longer to go public than I had originally anticipated. Told Vista I was going to leave in a year. Please find a new CEO. So they did, and I left. At around the same time, my brother was actually starting to think about what was next for himself. And we started to think about what are some of the big macro trends happening in the world. What are our areas where we had a right to play, a right to win? What do we think was a really good, durable investment thesis? And in due course, we founded the firm Averin. So that is sort of brings us to today.
And Averin, just for some context as well, Averin is, where do you guys invest? What do you invest in? Just high level, and we'll jump into some of it.
Yeah, so Averin is a venture capital firm. And the overarching thesis of the firm is that over the next 30 to 50 years, the rate of technological advancement, where technology is today, the capabilities and where it's going, it's just so inconceivable that the healthcare ecosystem looks like how it looks today, will look like how it looks today. It's impossible to imagine that 50 years from now, it like resembles how it currently looks. And so, it's about a fifth of the economy, and it's going to be disrupted all across, ranging from AI and all its different permutations, be it drug discovery, development drug discovery, drug development, clinical trials, design, to sensors and software. to how care is provided, to remote patient monitoring, to insurance and payments, everything is just going to be fundamentally disrupted. It's an enormous opportunity. And so that is the sort of overarching thesis that we're playing in. Um, and that, covers a lot of different touch points within the healthcare ecosystem. Our first fund has a set of specifications. So like in the first fund, we're generally not doing single asset therapeutics and stuff like that. But in due course, we may or may not. This current fund, we tend to be sort of a little bit towards the middle of a company's life cycle. So after it's proved out its core model, um, or there's a lot of data about the underlying technology. So we're not going to do as much pie in the sky stuff in this fund. In future funds, we might.
Very nice. I don't know, have you seen the podcast of I would agree with you, and most people would agree with you that the next 30, 40 years will have massive technological advancement. But there was a fun that's disrupting the Silicon Valley community. Peter Thiel went on this long talk about, in the same vein of his bringing up the Antichrist, he also brought up this long spiel as to why we're in technological stagnation and we haven't done anything cool in the past while, and nor will we. And it was quite a fun episode. But I always like to bring it up because everyone's so excited, right? And we talk to, and I run a seed stage company. We talk to investors all the time, and everyone's so pumped and excited about the future. And then I always, just to be fun, send them this video to get everyone thinking. But
Yeah, I don't pay much attention to that sort of stuff. Um, I'm a little more optimistic.
yeah, no, it's super fair. I mean, I would agree with you. Well, cool. I mean, I'd love to just kind of kick it off and like think a little bit through the first principles on health investing and how you guys think about investing and what's exciting to you. And we'll dive deep into some of these segments, but just in general, kind of you talk about this big, next 30, 40 years, we're going to see a lot disrupted across a bunch of different segments. What are you seeing now that's exciting? What are you like? How are you thinking about underwriting investments? Like, what are you really looking for when you guys think through that kind of stuff? Just want to kind of kick it off there.
Yeah, I mean that's just such a big topic, right? Like the set of investments that we've made even covers such a wide range of
That's fair.
things. And it like, healthcare, even it's when people ask like, what do you require for revenue? We don't require anything for revenue because the majority of the companies that we've invested in don't make any money today. But they've like hit a certain level of progress, and it will be a step function that is somewhat predictable for how they make money. And so a big thing that we think about is how does this thing that we're looking at fit into the flow of dollars? And I think that's kind of like this the initial challenge that a lot of tech founders that are getting into healthcare have to really think about, which is, if you're building a consumer app, if you're building an enterprise app, then people will often say, and will often be right, that's like, if you make a great consumer endpoint experience, end user experience, the best product will often win. And that's not always true, but that's often true. But in healthcare, that is not true. If you build the best patient experience, well, great for you, but you still have to figure out who is going to pay for your product and why they want to pay for your product. And it has to fit into making whoever is paying for your product more money and in a predictable way, and or better health outcomes in a pretty coherent way. And so we really look for this sort of thing in the companies we evaluate.
And this is because of like the current, provider payer system and whatever else.
Well, I mean, it's like if you're a health system, you have people selling you stuff every day, all day, right? And you have a lot of vendors, but you have pretty thin margins. And so anything you buy, you want to get an ROI for. You want to make money. You are, at the end of the day, a thing that tries to make money. And or you want to deliver better care in a predictable way. And how are you going to measure what that care is? And you have to have some kind of like tangible unit of value that you're going to assign to the thing that you buy. And so it while at some level it's upstream to like payer provider, it's also just like who is going to buy your software or your product and why would they do that? And it's almost in the sense that, payers separate the consumer, the average everyday person, from paying for healthcare. So in that sense, there's a separation of who might pay for something and who might use it on the payer versus consumer side. On the provider side, you just fundamentally have to appeal to their sensibilities.
Yeah, that's super fair. So that's kind of like kind of from the business side, fine. We're trying to toggle, outcomes, dollars, etc. What about then, like maybe diving into the founder side, or in general? I'm just trying to understand like the broader before I dive into some of the key topics, like the underwriting process. Like what goes from sourcing to execution. What are these interesting metrics that you're looking at? What is either unique or the same, but maybe you guys have a unique insight as to how you're thinking about it. So business sense is interesting. I think
Yeah.
agree disagree, but a lot of companies in the health, a lot of investors in the health tech space will look at excitement of idea and the best product, and we'll get it wrong there. But or even on the founder side, like what is from the investments you've made today, common DNA of founders that have done really well, or in general what you're looking for in kind of this unique insight to go and say, okay, the dollar and the business sense line up, but the founder has something exciting about them.
I would be really curious. You said agree to disagree. I'm just going to push back on that. What is the counterpoint to
I
building the best consumer product winning in healthcare?
As in, I'm making the point that there's probably a good bit of investors that have invested in products that are really good
Yeah.
and don't think about like the business sense, or even like, I think actually that my secondary point, that's kind of another big one, is maybe not the product itself of like the medical side, but something unique about it that is not necessarily focused on attracting medical dollars. So, for example, like we had a really long podcast a long episode on this podcast, and we talk about with a lot of founders about what does it take to win in healthcare? And honestly, one of the most common responses is distribution, or like is
Yeah.
you build a marketing engine, and so maybe that is the product in itself, and like you have a great product that's like solving something interesting. You've got a marketing engine, and I'm also, for reference, I'm not talking just like deep healthcare selling to hospital systems. I'm also talking like lower down the stack selling direct to consumer and so
Yeah.
forth. And there's
Well,
like a lot of companies that seem to win there.
let me give you an example of how I think about the world, which is an investment we did make versus an investment we didn't make. Um, and so this is in the MCED space, which is multi-cancer early detection. And so there's a company now called Grail that
Of
has a
course,
Gallery test, and that's a cash pay test. And so that means insurance doesn't cover it because the sensitivity and specificity are pretty low. And I mean, they're fine, but they don't meet the reimbursement thresholds. And so that means that every customer that they get, it's just a CAC to LTV game. And their TAM is people who are able to, or really their SAM is people who have the wherewithal and desire to pay for a cash pay test, which is a relatively small market.
but growing.
And
Or would you
okay,
disagree?
I mean, it's growing, but it doesn't change the overall point that it's a relatively small market.
Okay, fair.
And the much larger market, for example, is Medicare Advantage or Medicare. And so if you can fit into the reimbursement flow, then you can make a lot more money. And so the company we did invest in, which is Freenome, has tests that, you know, with all, if everything goes according to plan, will get FDA approval next year and be eligible for reimbursement, which means that a doctor at the time of your annual checkup or any other time can, as part of that annual checkup, just draw one more vial of blood, send it off to the Freenome lab, and get right now colorectal, but in the future pancreatic, lung, other forms of cancer, and it's fully reimbursed. And so when you talk about distribution, like the number of people that can service is multiple orders of magnitude more than the cash pay market, because the number of people who go to the doctor and are okay with somebody else paying for an additional test, especially when it has clinical validity, right? And that's like something that's super important, which is, you know, does a test drive clinically valid outcomes that yield productive additive things to the healthcare ecosystem? And if you have a high sensitivity and specificity, then the answer is yes. And if you don't, then the answer is no.
Are you a health coach or running a health course and looking to level up your client's experience? With SciFox Health at-home blood test, you can deliver lab-quality blood work right to your client's door. Seamlessly ship samples back for fast and actionable results. Personalize every consult with the data that matters. Clients who complete a SciFox test are 60% more likely to enroll in a paid program after their consult compared to those who only join a sales call. If you're ready to give your clients the edge, go to scifoxhealth.com/partner. And as a Silicon Fox podcast listener, enjoy 10% off your first bulk order. This is interesting. So I'm actually really curious to hear what you think about. There's obviously a mass, and I'm alluding more to the companies that are kind of in this health and wellness, performance space, function health. People in that realm. What do you think happens to those companies? Because in this world that kind of you're envisioning, these companies don't play a role. They're not, they're wrappers on top of existing infrastructures. They're just building social media distribution, becoming valuable businesses. Functions what, $2.5-3 billion business, or is $11 billion business despite a very non-clinical sensor that does have a pretty high noise in the signal. Um, yeah, like thinking about
Yeah.
those kinds of businesses, how does that fit into this broader world of healthcare, or do you try to segment the two of those?
Yeah, I mean, I view that from a slightly different lens. Um, and so, you know, what ABC values a company at is one thing, and whether it has a medium-term sustainable value prop is another question.
For sure.
I would put Aura in the wellness category more than in the like strict healthcare. Like, there's definitely like a little bit of
They're trying to
blurriness.
get into healthcare. They're like, my point here is like, they're really, that's where they see value. And so now there's kind of this intersection and actually blurriness, exactly as you said. So it's in this realm enough where I'm trying to understand what you think. Cause I actually agree with you. I think that those are two different
Uh,
things. I want to know what you think of these businesses in the long term.
yeah, I mean, I think they provide data that is helpful, but they don't provide actionable steering. And that's what I think is more important. So, like Whoop got into this space and they got in trouble, and they should have gotten in trouble because they were providing a
That's fair.
non-FDA approved set of readings that should have been FDA approved. And Apple took the FDA approved route and, is providing a different set of readings, and they're doing it better. Function health is a really interesting one where, it's definitely appealing to people's, like right now it is fully cash pay. It is, so far as I understand, a wrapper on top of third-party labs,
Yeah.
and um, and I think LabCorp which does the tests, I believe, just announced their own version of that product.
Sure.
They acquired, I think, Ezra, which in turn they've all had questions about the value of the signal, and it remains to be seen. It's a really interesting and open question about, are we driving is all of this financing a system that is primarily in service of anxiety or in service of real outcomes? And,
Interesting.
it's people's prerogatives to do things that are cash flow negative or of negative net value to the healthcare ecosystem. But when you think about the healthcare ecosystem as a whole, you need to evaluate something in terms of what kind of bona fide value is it delivering to the ecosystem. And that all gets down to like, can it effectively steer someone into an appropriate care pathway with an effective like use of dollars? Is there a real ROI or not? If you're just adding cost without adding value, then that's what you're doing. And there is a market segment that is willing to pay for that. And that's fine, but it will always be a relatively small market segment.
No, for sure. Okay, yeah, no, I think that makes the point much clearer. What do you? There was a point you made, and I wanted to double click into it. Something about actionable, like Whoop or something. I don't remember exactly what you said word for word, but something about it not being actionable versus a lot of like more of the FDA approved, a lot more of the typical um, companies that target reimbursement, codes and go much more deeply technical are more actionable. Was that along those lines?
I don't remember exactly what I said, to be honest. But well, there is what Whoop provided, which was not FDA approved, which was a set of blood
Yeah,
pressure readings
that thing we can agree
that,
on. That we can agree on. My bigger question where I'm kind of heading at is to understand, or to bring up a different set of points to say what these companies are doing maybe isn't necessarily providing like the tangible outcome and like change of behavior, but it's providing a data point that's now something people are thinking about. It's brought like
yeah,
light into the question to say, okay, Grail, I don't know if they have the same effect, so I won't make the claim, but like a lot of companies in the sleep space made it yes, we all know we need to sleep well, but now they've made it a very much a segment on our spend to say, okay, now I want to get, and of course, if something
yeah,
comes out that's clinically adhered to and much stronger, there's of course value there, and that's like not the, I have all of my own takes on the
yeah.
fact that Whoop or all uses pretty faulty sensors, but there is
I
value to that.
mean,
Would you agree? Disagree?
yeah, I think that's fine. This is when I think about the healthcare space, this is like really incidental. And it's like, it's wellness, it's nice. There's 8 sleep, there's Whoop, there's whatever. These things are not going to move the needle on human health.
On
These are
outcomes.
like, yeah, it's like you
Interesting.
should sleep
S
more. Great. And it's fine for people to want it, it's fine for people to have it. But when we think about like, where is the world going to, where is change going to come from in the world? You know, is it going to come from a mattress that like tells you to sleep more? I don't know.
Fine, super fair. Okay, interesting. This is a very interesting point. I want to like dive deeper into it. What so then what do we see in healthcare? What do you see being on the investing side of things that is deeply clinical, accurate, that is preventative? Or are you making an argument that we should remain in the current model that isn't necessarily working? Or are you
What
pitching a value-based model?
I guess what I'm saying is, in theory, everything should be evaluated from an ROI perspective. And it doesn't have to be in fact ROI, but it should be in theory ROI, which is if you
ROI of
can't,
health or dollar amounts?
well, those are the same thing. You just have to like, is it adding value to the healthcare system or not? And like for the amount that it costs, does it drive a commensurate value in outcomes? Does it reduce costs downstream? Does it, or does it have a negative cost, or does it have no impact? And if it doesn't really have an impact, then, okay, it's delivering a market segment that wants to have those things. And that's fine. But when you think about like what moves the needle, what moves the needle, like where people are dying because of XYZ things, and how do we address those things? So GLP-1s, it's a really interesting question. That's a needle mover. That's important. Like uh
As as
yeah,
in good
and
as in
so
good or bad?
I think
Or
it's
just
100%
net?
good. I don't know that there's too many arguments to the contrary other than cost, but cost will in due course come down.
But does this not assume? We'll move off this topic in a second, but I'm just kind of curious here. Does this not assume a value based approach? Because for ROI
Well,
to be this aligned, like I mean, if I provide a product, a hardware product, or
yeah,
some kind of solution to hospitals that massively improves top line growth for them and marginally improves kind of patient experience, and it's difficult to measure that ROI. Is that truly an ROI in your philosophy
yeah.
here?
I mean, no, I wouldn't think of that hypothetical device as particularly additive. Uh, at the same time, I don't know how a device would do that. Because by and large, what hospitals get reimbursed for from insurance is what insurance has determined adds value to the care of a patient. Now, this isn't perfect, right? It's still a slightly imperfect
Yeah.
world, but uh, generally speaking, a hospital can't just randomly add
Not
some
randomly, but
device.
they
And
there is like it's not a perfect world. So there is very much incentive from hospitals to like keep people, have inflows, and on the flip side, insurance,
yeah,
of course.
but all of this stuff comes at the flip side of, like, whenever there's readmissions, hospitals have to pay for that out of pocket. And so they do have incentives to deliver high quality care as quickly as possible, even in a traditional fee for service model. So I guess my point, though, is I'm not talking about an actual value based care system. I'm talking about in theory. So if you
Got it.
are selling, and I guess just like, I don't have anything really particularly against function health, but I'm just going to say an abstract version of function health where you're paying for 1 million biomarkers, and just statistically, you get 1 million biomarkers, one of them's going to be wrong a lot of the time, and the relative value, and you pay $1,000 a year. So $1,000 is going in the health system for some ratio of signal to noise. And the noise will almost always have you go for a follow-up check that takes time from a doctor, that adds cost to the healthcare ecosystem, and that drives very little results because the percentage of false positives are going to be very high. Then that,
Interesting.
in my lens, is a negative net value to the system, as opposed to something where the noise far outweighs the signal. I mean, sorry, the signal far outweighs the
Yeah.
noise.
This is actually a very interesting thesis. I can't say I disagree. I think actually that may be something that plays out. I didn't think about it this way before because yeah, I guess my core belief, and we'll have to see how this plays out over time, but we just haven't done this before. What function is semi-pioneering? So there may be like even if there is a lot of noise, there may be value to say like, hey, we're catching all these things preventatively, and like people are able to take course of action and so forth. But interesting. Um,
Yeah, so
yeah,
this isn't
I'm
about
excited to
function
see.
per se.
Yeah, I'm
And
I'm saying whatever, just
yeah,
the fact that we're tracking more.
yeah, and I think, functions really kind of like at this point where it's like, if the data that they can surface is really actionable, then that's great. They do have an incentive that is going to be tough for them to deal with, and I wish them the best dealing with this, which is like, you don't want the test. If you're like a consumer and you paid $400 for a test, and the test is just like, you're fine. Like, are you necessarily gonna, like, how incentivized are you gonna be to get that same test again? And
I mean, the pitch is that you should get it like often because 2 months ago you're fine,
yeah,
and 3 months you're not. Which actually, you bring up an interesting point. Okay, interesting.
but this is just, neither here nor there. When
Yeah,
I think about driving value to the healthcare system, which was like 12 questions ago, that
yeah.
was the
Okay,
lens. But
got it,
that
got
doesn't
it.
mean that every single investment has to necessarily 100% fit into it. But I think that's how change happens.
Yeah, no, that's super fair. There, I can definitely agree. Well, cool. I want to dive into like one of the segments, obviously one of the most exciting ones. You guys have a few that you dive into. Um, but artificial intelligence, obviously, that's one that everything is being invested into. How do you think about vertical AI? Is that something you guys are investing in? How do you fundamentally think about it? Vertical versus horizontal? Sorry, like are you investing in workflow tools? Are you looking at these kind of AI radiologist, Viz AI type companies? And where do you see value? I
Yeah.
am actually kind of fascinated in anchoring this conversation into like this. I mean, I guess you will because that's your philosophy, but in the philosophy that you brought out here in terms of where value gets built, how does it play out across some of these themes?
Yeah, I mean, nobody's going to argue about the administrative overhead in the current healthcare regime. And, you think about, where is money going when you pay for healthcare? A lot of it is going to administration, and a lot of it is going to insurance. Um, Not as much as going to pharmaceuticals as I think maybe people think. Certainly not none, but, it's like 9% or something. Um, and so for sure, like administrative stuff, back end stuff, RCM, it's a great opportunity for uh, people to build out really compelling software packages, and I think people will. I think we're in the early innings of what this is going to look like. Where I guess my own personal view, and maybe I'm wrong here. We haven't made a bet in this space yet, and I'm just intrigued, which is like a lot of these companies go super quickly from like 0 million to $100 zillion of revenue and valuation and whatever. And obviously they're not going to keep that trajectory forever. And are other companies going to come in and like, that's because the delta of like an AI enabled company versus a non AI enabled company is so really palpable that a lot of companies will be like, oh, that's great, let's do that. But then the next company comes along who can deliver, a lot of that same functionality, but at half the price. And people are gonna be like, oh, well, let's
Yeah.
try that guy. And so it remains to be seen what the sort of sustainable price points are for some of these things. Um, and what the sort of relative value of distribution, incumbent advantage versus first mover advantage. And I think that's playing out in an interesting way for Epic versus a bridge. And we don't have a bet there. I just think it's like an interesting example of how this
And
may or may not play out.
Ambience and Nabla, right, were the other two.
Yeah.
Are you talking the A script? So
Yeah.
I also mean like I think what I find interesting about this thesis is it's a lot more realistic, and especially like where are we now versus where are we in this kind of fictitious world that people are buying into. So I'm also curious in like the take in the vertical AI with AI
Yeah.
radiologists and so forth. Like, have you seen that provide value in what you believe in terms of like how actual value gets provided in the healthcare space? Is that something you see where we head in a positive direction, or is it something that is um,
Yeah.
filled with a bunch of
Like
noise?
I think there's a lot of really compelling vertical AI companies, and we've looked at a lot of them. And depending on how you define vertical AI, we either have or have not made an investment here. And so, like an example of a company we did not invest in, but just to speak to them, that they're sort of like a well-known company is Rad AI, where Rad AI delivers real value in that when a radiologist sees a scan, they have to write up the 10-page report, and Rad AI will read the scan and in the radiologist's own language draft a preliminary report that then the radiologist goes through and edits according to their actual read of the scan, and they can change it and so forth. So they're not delivering care, but they are, or diagnoses, but they are delivering a rough draft. And that adds real value to a radiologist's life because like now it's faster and easier and they can see more patients. And fully support it. I think it's a great technology and it really works. And it's like obviously coming to pathology and a few other areas where there's a real need, and AI can, there's a large data set of like labeled data with like clear conditions that it can train on, and it's relatively, it's hard but a knowable universe of data. And so I buy a lot of that stuff. There's going to be like a relatively small crop of companies that can deliver high enough quality technologies uh, that hospitals will be willing to pay for them. So I'm all about it.
Where do you see like the wedge then in the short term um across like which of these sounds the most exciting to you that you really have this like whether it's a mental model or like the true unit economics and like hey this is going to drive the most value in the short term because the technological side of it's built out and we see this as the biggest like lagging part of the healthcare system because at least from my perspective a lot of what we see is like fatigue. I know that we chat a lot with the NSF SBIR
Yeah.
um and it's just like they're getting pitched like thousands of these AI companies. So there's also like this kind of counterintuitive to say like, hey, even if it is useful at this degree, I'm tired of hearing pitch number 750, so I'm just not
Yeah.
even going to think about it.
Yeah. One of the things I like to think about is like a lot of people talk about AI for prior auth and AI for claims, denials, appeal. And then I like to think about this like AI arms race that's like, on the provider side, you've got all those things, and on the payer side, you've got AI that's working on like the opposite side of the same question, and they're both just going to get better and better over time. For sure, I think burnout is a big deal, and I honestly think that's one of the biggest areas where AI can make a short-term impact for the positive on people's lives. And we're seeing it in things like radiology and hopefully soon in pathology and the like. Um, there are other areas that I think are maybe slightly less discussed, and it's not as clear that AI has a short-term path to impact here, like nursing, where, it's a very kinetic practice. And unless you have like, I don't know, humanoid robots that can, you know, change someone's clothes or something, it's going to be tough to move the needle on the labor shortages in the nursing market, which are a very large percent of health system costs.
But you think it's, as in you're saying, you think the technology is ready to do something to move the needle there, or it's like a
No,
something
no, no,
that's
no.
overlooked? Got it.
I mean, I don't know. This is something where, as an investor, I'm like, if you've got a great tech, like come pitch me because I want to like see people. I have yet to see something where I'm like, this is going to solve it. And I don't think it's an easy thing to solve because of the reasons I
Yeah.
just said. But this is an area where we're like actively looking at a lot of companies because I think this is kind of one of the big looming issues in the healthcare system, between you know the staffing problems today, the cost structure, the fact that people are leaving the profession faster than they're coming in, and so forth, the growing need for practitioners there. It's a huge issue.
Yeah, no, that's super fair. One of the other kind of themes I saw that you guys invest in is in the longevity space. How do you guys disseminate across what is considered wellness, what is truly clinical longevity when it's so early days of actual science-based techniques?
Yeah, I mean, I think wellness is, in my view, and I don't know that this is like the answer, but in my view, is going to be something that's outside of the FDA's scope. Um, and so it's generally going to be good for like engagement, data collection, making people feel better, but not as good for like medical claims. And that is just what it is. Whereas clinical longevity is going to be things like interventions with disease modifying evidence, things regulated as devices, drugs, or validated diagnostics. Um,
But my
you
question
know,
is like
and
what we see today. Like what do we see today? Because I think there is a lot of excitement and hype around longevity,
yeah,
but if you kind of start to dive deeper into it, a lot of it is non-clinical, but also because we don't have the data to like
yeah.
make very clinically based things.
I mean, it's hard. It's hard to say like anything because longevity requires a very long measurement period,
Yeah.
and but like GLP-1s, for example, are a longevity tool. Like they have been shown to reduce mortality, and the cost like doesn't justify it, I think, just yet. Maybe it's marginal. Um, but the cost, eventually these things will hit generics, and then the cost profile will be very different. Um, a lot of other things like, does metformin just make you live forever? Like, no, but these things are good. I'm when I think about longevity, there's certainly the people in the like Brian Johnson camp, and I think everybody wants more data there. Yeah, I wish him the best, and I like following what he does. Um, and there's a lot of people experimenting with supplements in a lot of different ways. I personally look at the world from an early detection and intervention perspective as probably the most clear route to impactful things. Um, and so that can be lightweight, minimally invasive sensors, highly accurate diagnostics, things of that sort.
What do you what like makes it? What's the threshold? Either for I mean, I'm actually kind of curious in two ways, both from your investment thesis, but also just more you see providing value. Like what makes an early detection company fundable, whether you're looking at again regulatory adoption, success rates, and again, you said it
Yeah.
yourself, like success rates are quite hard here because, well, I guess in early detection it's a little bit easier, but in longevity space it gets a little bit tougher.
Yeah, I mean, I guess at some level, like, what is longevity? You know,
Yeah,
like,
what is your definition?
uh,
I'm actually curious on that as well. How do you guys define it?
yeah, I mean, that's a. I think there's definitely like what I just defined as wellness, and that accounts for a lot of what people traditionally think of as longevity, which would be supplements, non-FDA regulated things that a wellness community broadly believes. And, I don't disagree, but this is just what it is good for extending their lifespan. And that's one area. And the other area is interventions that are earlier stage that the data will show will, like if you catch cancer earlier, that is good for longevity. And so if you have a minimally invasive, like it will just, it makes it easier to cure the cancer and so forth. Um, and so if you have a minimally invasive cancer detection, then that is great for longevity. That's not what people traditionally think of as longevity. Um, another company we invested in called Biolink is maybe not a
Oh yeah,
traditional,
we know about.
but yeah, not a
They're awesome.
traditional longevity company, um, but it's a minimally invasive, or non-invasive, depending on your perspective, uh, blood sugar, like alternative to the traditional continuous glucose monitor. Also, it will in due course. They just got de novo
Yeah, yeah,
clearance,
we saw. Yeah,
and
huge congrats
that.
then.
Thank you. I mean, congrats to Rich and the team. They're doing great over there. And the fact that they were pursuing the FDA route for upfront type 2 diabetes, eventually type 1 diabetes, it was key to our investment thesis. And it's like icing on the cake that, and this is an enormous pie where they have 40 microneedles on their device rather than like one sensor on the traditional CGM, so that they can measure a huge slew of analytes all at once, which can start to give you the first real-time multi-analyte metabolic feedback, that would be
Yeah,
available on the market. And, not every one of those is necessarily going to be like medical. Like they're looking at lactate, for example. And lactate is if you're working on like zone 2 type athletics, then, are you in that range? But that's good for longevity in a different way.
yeah, no, super fair. I mean, I think what they've done is fascinating. It's cool that you guys are involved. I am curious, then actually, even for my own sake, how do you think about because like you look at that space and there's a lot of companies that have succeeded in the CGM space without even building their own CGMs and just kind of building around this brand. And you kind of answer this question. So if there's no new insight, we can gloss over it. But building, yeah, this brand and kind of engine of customer acquisition, and then maybe going back
Yeah.
and building up infrastructure and clinical tools, rather than kind of going ground up and saying I have this massive scientific improvement and massive kind of unlock. This is going to
Yeah.
drive this much value. Like how do you think about with portfolio companies, or when you guys, or when you, if you offer any of this kind of support, or even in general when you look at to invest in companies, when you analyze their thinking, is it a team of engineers that have really cracked something scientifically and are really focused in the lab on that, and then it never hits market, or fun, or kind of the opposite, where we see some companies doing, again, not amazingly, we don't know how they'll do in the long run, but doing relatively well when they've built the opposite and built a great distribution
Yeah. I
team rather
mean,
than.
there's certainly a market for like I guess one way to think about it is, um, in the clear aligner space, as you may know, Invisalign, a lot of their patents expired. many years ago, and there was a rush of companies building direct to consumer products in the clear aligner space that were raising hundreds of millions of dollars at big valuations. And I think every single one of those companies has either pivoted or gone out of business because, like, at the end of the day, if you're a direct to consumer healthcare company, your revenue is only on like an LTV of each customer, and it costs whatever it costs, and it will continue to get more expensive over time, generally speaking, to get more customers. And and then there's like, what do you think the LTV is, and what is the actual LTV? And
Yeah.
those are often not the same number. And so, like Smile Direct Club recently went out of business,
Oh,
and
interesting. I
like
did not
just
know that.
full out of business because, what I just said. And um, so when you think of like CGMs, for example, I think you're probably alluding to Levels, which has built a great business, and they're like a consumer facing business, and I respect what they've built. At the same time, I think that's mostly a cash pay business, and it appeals to a cohort of users, and great. Um, the highest LTV device of any medical device is the CGM itself. And that's just a fact. And that's because it's a fully insurance reimbursed device that customers have to buy every single week for their entire lives. And, you know, if you can get in that flow, and that's just type 1 diabetes, right? So type 1 diabetes is like 10% of the type 2 diabetes market. And so if you can get in the flow of funds for like a high value device that is the
Yeah,
highest LTV of any medical device period,
that's fair.
that's a good place to be.
Yeah, no, super fair. I want to shift a little bit to the macro and policy in the United States and how it has to do with some of this space. And whatever you know versus don't know, and maybe this is something you guys look at and like how it factors into how you make investments and how you think about this space. But one thing that's always constantly wondered about is like we have such a massive healthcare budget, yet our people are so unhealthy. What kind of reaction does that kind of statement draw from you guys, and how do you think about it when you think about portfolio companies?
Yeah, I mean that's a great question, and this gets to like the original sin of the U.S. healthcare system being the separation of the payer from the person seeking care, and the fact that there's kind of like no incentives built into the system to like take care of yourself. And so that's certainly part of it. We have the best like sick care in the world, which is like if you get really sick,
Yeah, we're good at keeping
you know,
people alive.
yeah, and we will average on the average like do a better job than most places and have more opportunities for people to get taken care of. Like other countries where the healthcare outcomes are better, it may take you months and months and months and months to see your doctor, but here maybe less. And but there aren't as many incentives for people to take care of themselves. And that's certainly a big part. Having insurance companies make big profit margins, like 20% is like a big, big part. And the administrative overhead is a big part. Um, there's, high hospital prices, but like at the same time, like it's not like hospitals are sitting on fat margins. You can see these numbers. Like half of the hospital systems are losing money. So the prices are high, but that's because a lot of things are problematic. And, it's not just a matter of like fixing one thing and everything gets fixed. And so, that even gets to like my kind of upstream thesis, which is like, and this isn't 100% the case. So like, I'm just kind of like how I'd like to think about the world, which is it's going to be hard for anybody to come in and just like fix like nursing unions are like a big thing, right? And you can't just like change the way nursing unions contract. So, um, but if you can drive just value as I've defined it, then that will move the needle positive. And over time, more things will be more positive. Um, but yeah, there is a lot of misaligned incentives, and those will continue to exist.
how much of it do you think is addressable by startups? I think like the pretty techno optimistic belief is that, you have a bunch of scrappy, fast, capable companies that, build great solutions at a cheaper cost and see problems that they go out and fix, and that, fixes a lot of things. And like in general, also, I guess a secondary part to that question is how do you think about this and like the TAM and how TAM plays in reference to either your portfolio companies or how they think about the medical market and how that's going to evolve over time if and when we do shift to a much more preventative, healthy, happy model.
Yeah, I mean, I'm sort of like, as to whether or not we shift to a more preventative model. I mean, I guess it's like there are bills in Congress to expand coverage for MSAD. Um, is that going to get passed? Is anything useful going to get passed? That's like that would be great. Um, for startups, I think there are billions in avoidable waste that are addressable for sure. Um, there's things like prior automation, claims denial reduction, throughput optimization, site of care shifts, and the like. And that's contrast. So, like, some of the things I said about misaligned incentives, for example, is like hospital prices are high, and you have this whole like hospitals are they face mixed incentives where if you think about like care, certain forms of readmission are fully reimbursed. And so like if somebody if you're a provider that like sees people every time they have a flare up of their disease, then you're not necessarily fully incentivized to like cure their disease. And I think some startups are working on stuff like that to help with risk, to help with. I'm very optimistic on things like ACOs. I think there's a lot of value that's being driven in the ACO reach model. We've invested there. And Medicare Advantage is a more complicated beast. And I think that's like like they had to be generous with payments up front to get people into the system. And I think you're seeing like over time, they continue to turn the screws on reimbursement on like they understand where the upcoding happens. It was like the whole pressure of upcoding and people pay attention to where upcoding happens and then, you know, decrease the payout to where they think the relative upcoding is
Yeah.
over occurring and so forth. And that is happening, but it's going to play out over a much longer time frame.
Yeah, no, that's super fair and interesting to see as to how it actually turns out. But I'd love to jump in a quick rapid fire with you. I'm just gonna ask a few questions. Just give me the first thoughts that come to mind. That sound fair?
Sure. Let's do it.
What's uh what's your most contrarian belief?
Uh, we haven't done a pure play healthcare IT business. And it's not to say that we wouldn't, but I think maybe our standards are higher than a lot of other companies.
Outside of health, where do you see the
Oh,
most opportunity
outside of
today?
health.
No, no, no. This is a separate
Um,
question. Outside of health, where do you see the most opportunity today?
I mean, obviously AI, right? Like AI for everything. I guess this question that I grapple with a lot is the one I mentioned, which is like, we're seeing all these spikes of businesses. Are they going to be durable, or is there going to be like a whole crop of companies competing and messing with the dynamics? And I'm really excited to see how that plays out. I'm also really excited to see whether there's like the models can continue to iterate at the same pace of growth that they have been, or if we're plateauing.
Yeah, I mean, there's a good bit of science and behind some of that backing. But last fire question for you: what were your parents' philosophies when they raised you?
Um, just like we have to be our best. And I co-founded this business with my brother. I don't recall if I said that, but my brother has founded or co-founded 30 plus businesses, seven worth over a billion. Uh, I have but one to my name, and I think the ethos that they put in, which is like whatever you do, just like do your absolute best, find what you're interested in and excel at it. Um, I think that's great. Like, a lot of people are telling their kids, you got to study math and science, and their kids don't love it, then like, I don't know that that's always going to work out. I don't
Yeah.
even know like what should my kids be studying in a post AI world. Like, I have no idea.
Physics,
Um,
physics. That's interesting.
is it physics? My wife is a physicist. She worked at CERN. She did all this stuff, but like, um, now she's in finance, like everybody else.
That's how it goes. Yeah.
Yeah,
Amazing, amazing. Larry, thank you so much for hopping on the Silken Fox podcast.
yeah, it's great to meet you. I really appreciate all the questions. This is